Today, we will talk about gross income. Gross income, also known as gross pay when it's on a paycheck, is an individual's total earnings before taxes or other deductions. This includes income from all sources, not just employment, and is not limited to income received in cash. It also includes property or services received. For companies, gross income is interchangeable with gross margin or gross profit. An individual can find their gross income by consulting a recent pay stub or calculating their hours worked in wage, while a company's gross income may require more computation. Lenders or landlords use an individual's gross income to determine creditworthiness, and gross income is used as the starting point before subtracting deductions to determine the amount of tax owed when filing income taxes. For businesses, gross income allows them to understand how specific aspects of its products are performing, driving success or failure. The approach to determining gross income for an individual is different from that for a business. Individual gross income includes wages, salary, tips, capital gains, rental payments, dividends, alimony, pension, and interest. Business gross income can be calculated on a company-wide or product-specific basis and is found by subtracting the cost of goods sold from the gross revenue. Gross income and net income are used to describe profit. For an individual, net income is the total amount of income remaining after all personal expenses have been paid, while for a business, net income includes more expenses than gross income. Individual net income more closely resembles their final paycheck amount, while business net income incorporates every facet of cost. Imagine an individual with a $75,000 annual salary, generating $1,000 a year in interest from a savings account, collecting $500 per year in stock dividends, and receiving $10,000 a year from rental property income. Their gross annual income is $86,500. Alternatively, the individual can calculate their monthly gross income is approximately $7,200. Expenses such as rent, student loans, and auto loan payments are not included in the calculation of gross income. For a company like Apple with reported net sales of $97.278 billion for a specific period, the gross income is found by subtracting the total cost of goods sold from the net sales. Other expenses like research and development costs, selling and administrative costs, and income taxes are excluded. An individual's gross income is the total amount earned before taxes or other deductions, often stated in their paycheck, along with other sources of income that have been generated. The gross income of a company is calculated as gross revenue minus the cost of goods sold. For example, if a company's product sales were $500,000 and the cost to produce those products was $100,000, then its gross income would be $400,000. To find your personal monthly gross income, calculate the amount of money you earn each month. This will likely be different than the amount of money you take home or receive as payment directly from your employer. Yes, gross income is the total amount of income a person or company has earned before deductions against that income. Gross income is calculated as the total amount of revenue earned before subtracting expenses like costs, interest, and taxes. Here are 5 key takeaways. 1. Gross income for an individual consists of income from wages and salary plus other forms of income, including pensions, interest, dividends, and rental income. 2. Gross income for a business is total revenues minus the cost of goods sold. 3. Individual gross income is part of an income tax return and, after certain deductions and exemptions, becomes adjusted gross income, then taxable income. 4. Individuals may also be required to report gross income when attempting to secure a loan. 5. Businesses often use gross income instead of net income to better gauge the product-specific performance of the business. Hope this would help. Thanks for watching.